Man, the stock market has been kind of a wild ride lately.
Yeah, feeling a bit like a roller coaster, isn't it?
Yeah, up and down, all over the place. We saw the S&P 500 dip recently and the Nasdaq Q Composite, well, it's down about 12% from its highs.
It's definitely understandable if you're feeling a little uneasy seeing those numbers.
It can be a bit nerve-wracking, that's for sure. Makes you want to just, I don't know, bury your head in the sand.
I get that, but when things get chaotic, sometimes the best thing you can do is take a deep breath and look at the bigger picture.
You mean look past the daily swings and try to spot those long-term trends?
Exactly.
And that's exactly what we're going to do today.
We're going to take a deep dive into the world of artificial intelligence, or AI for short.
Specifically, we're diving deep into a really interesting article from The Motley Fool.
The title is Tuning Out the Market Volatility: 3 AI Stocks Poised to Win Big Over the Coming Decade.
And it was just published yesterday, March 23rd, 2025.
So our goal today:
To help you, our listeners, cut through all the noise and really understand where the real opportunities might lie in the AI space over the next 10 years.
not just for the next few months or even the next year, but for the long haul.
We're talking about companies that could potentially thrive, even when the market's feeling a little shaky, you know?
The article specifically highlights 3 companies that they believe are well-positioned to be major players in the AI landscape.
And those 3 companies are Meta Platforms, Qualcomm, and Amazon.
Some pretty big names, each tackling AI in their own unique way.
Absolutely. Let's kick things off with Meta Platforms, the company formerly known as Facebook.
Right, trading on Nasdaq Q under the ticker Meta.
Now, Meta is a giant, right?
Huge. With a market capitalization of $1.5 trillion, that's a lot of zeros.
It is. And the article mentions that as of just a few days ago, March 21st, 2025, the stock was trading at about $595.88.
Yeah, it was down slightly that day, like 1.69%.
Okay, so why does the Motley Fool think Meta is such a promising bet for the future of AI? What's their core argument?
Well, a lot of it has to do with their decision to open source their large language model, which is called Llama.
Llama. Okay, I have to admit, I'm not an AI expert, so what exactly is a large language model?
You can think of it like a super sophisticated AI that can understand and generate human-like text. Like it can hold a conversation with you, answer your questions.
So basically, a really smart chatbot, but on steroids.
That's a good way to put it. Now, what's interesting is that a lot of other companies were trying to, make money off their language models right away.
Charging for access, licensing fees, that sort of thing.
Exactly. But Meta decided to do something pretty unexpected. They made Llama totally free and easy for any developer to use.
That seems kind of counterintuitive, doesn't it? Why give away such a potentially valuable piece of technology?
Right. It does seem strange at first. But if you think back to how Meta built its social media empire.
You mean with Facebook and Instagram?
Yeah. They focused on getting as many users as possible first. Monetization came later.
So the strategy with Llama is similar. Flood the market, get everyone using it, and then
Figure out how to make money from it later.
And judging by the numbers, that strategy seems to be working.
Over 1 billion downloads of Llama globally. That's a pretty clear signal that developers are excited about it.
1 billion downloads.
Mm-hmm.
Wow. So by making Llama so widely available, Meta is basically trying to become the
foundation, the go-to platform for AI development.
like building the operating system that everyone else builds their apps on.
That's a really good analogy. And, having that kind of foundational control can be incredibly powerful in the long run.
It certainly was for companies like Microsoft and Apple with their operating system.
Yeah. But the big question is, can Meta pull it off in the AI space?
Well, they've got one big advantage. Their core business is still incredibly strong, right? They're not exactly hurting for cash.
Definitely not. Their advertising business, which includes Facebook, Instagram, WhatsApp, and Threads.
Threads, their newest social media platform.
Right. They had a combined 3.35 billion daily active users in the fourth quarter. That's massive.
And the price per ad they charge actually went up by 10% in 2024.
So yeah, their core business is still generating a ton of revenue. It gives them the financial firepower to invest heavily in AI.
They are investing heavily, aren't they?
Oh yeah, big time. The article mentions that they've earmarked somewhere between $60 and $65 billion for capital investments this year alone.
That's a staggering amount of money.
It is, and most of that is going towards building out their AI infrastructure.
So things like data centers, the computing power needed to train and run these AI models.
Exactly. They're making a massive bet on AI.
So they've got a potentially dominant AI model in Llama, a cash cow advertising business, and they're investing heavily in the infrastructure to support their AI ambitions.
It's a compelling combination, that's for sure.
What does all this mean for their future growth potential?
Well, analysts are projecting that Meta's earnings will grow at an average rate of 17% annually over the long term.
17% annually.
Pretty impressive, especially for a company of Meta's size.
Right, they're not a small startup anymore.
Not at all. And considering their stock price has dipped about 18% from its recent high.
Some investors might see that as a buying opportunity.
The article suggests as much. It points out that the pullback has brought their price-to-earnings ratio, or PE ratio, down to around 25.
Which, considering their projected growth rate and their potential in the AI space,
could make Meta an attractive investment right now.
All right, let's move on to the second company, the Motley Fool highlights, Qualcomm.
Another big player, trading on NASDAQ Q under the ticker QCOM.
At the time the article was written, their stock price was $156.76.
Yeah, down slightly that day, about 0.75%.
But the article frames Qualcomm as a company that's poised for a turnaround.
After a period of what they call range-bound trading.
Which basically means their stock price has been kind of stuck in a rut for the past 4 years or so.
Yeah, not moving up or down significantly.
So what happened? Why did Qualcomm stall out?
Well, they had a great run earlier in the decade, benefiting from the strong demand for semiconductors and the rollout of 5G.
Everyone was upgrading their phones to 5G, and Qualcomm was supplying a lot of the chips for those phones.
Right. But as that initial wave of 5G adoption started to slow down, Qualcomm's growth plateaued.
So how are they trying to get back on track?
Well, they're banking on AI to reinvigorate the smartphone market.
In what way?
They've developed a new AI-enabled mobile processor, the Snapdragon 3 Gen 8.
Okay, and that's supposed to
drive a new upgrade cycle, get people excited about upgrading their phones again.
Has it worked so far?
They've seen double-digit revenue growth in the last 3 quarters, so there are some positive signs.
What?
It hasn't quite reached the level of growth they saw back in 2022 when they had that 32% increase.
Got it. So the new processor is helping, but not enough to really get them back to where they were.
Right.
But the article hints that something else might be on the horizon for Qualcomm. Something potentially game-changing.
You're talking about DeepSeek.
DeepSeek, right. What is that?
It's a company that's made some significant breakthroughs in AI efficiency.
Meaning?
They've figured out how to run AI models using much less processing power and energy.
And why is that so important?
Because it means that running complex AI applications on smartphones could become much more practical.
Right now, AI on smartphones is pretty limited. It drains your battery like crazy.
Exactly. But if DeepSeek's technology can make it more efficient,
it could lead to a whole new wave of AI-powered apps and features on our phones.
And that would be a huge boon for Qualcomm, since they still get about 65% of their revenue from smartphone chipsets.
So DeepSeek's technology could be the catalyst that really kicks Qualcomm's AI strategy into high gear.
It has the potential to be.
Now, apart from smartphones, is Qualcomm also looking to expand into other areas where AI is taking off?
Definitely. They're diversifying into the Internet of Things, smart home devices, industrial sensors, all that.
And they're even developing processors for mobile PCs.
Right. So they're not putting all their eggs in one basket.
But the article suggests that their biggest potential growth area might be
the automotive sector.
They're getting into self-driving cars.
Not just self-driving cars, but all sorts of technologies for connected and intelligent vehicles.
So things like advanced driver assistance systems, in-car entertainment systems.
Exactly.
How big of a player is Qualcomm in the automotive space right now?
It's still a relatively small part of their overall business, about 8% of their revenue in the first quarter. Revenue from their automotive segment grew by a whopping 61% year over year.
Wow, 61%. That's serious growth.
It is. It suggests that their automotive business could become a much bigger part of their overall revenue in the years to come.
Okay, so Qualcomm's got the smartphone market, the Internet of Things, mobile PCs, and now they're making a big push into the automotive sector.
All areas where AI is becoming increasingly important.
The article also mentions that Qualcomm's profit grew by 15% in the first quarter, reaching $3.2 billion.
Which is solid growth, but some investors might have been hoping for more, given all the potential catalysts we've talked about.
But their current valuation might make them look pretty attractive.
With a PE ratio of around 17, they're considered to be undervalued compared to other leading semiconductor companies.
So the potential for future growth combined with their current valuation
Makes Qualcomm a company worth keeping an eye on.
All right, let's move on to the final company in the spotlight, Amazon.
The e-commerce behemoth, trading on Nasdaq as AMZN.
At the time the article was written, their stock price was $196.18.
Up slightly that day, about 0.63%.
Now, Amazon is already a massive company.
One of the biggest in the world.
So what makes them a potential winner in the AI race?
Well, the key thing to remember is that the AI revolution is still in its early stages.
We're just starting to see the real potential of AI.
And Amazon is in a prime position to capitalize on that growth.
Primarily because of their cloud computing business, Amazon Web Services.
Or AWS, as it's commonly known. They're the dominant player in the cloud market by a wide margin.
And they're investing heavily to stay ahead of the competition.
They've committed over $100 billion to strengthening AWS.
So they're making sure they have the infrastructure to support the growing demand for AI services.
Exactly. Companies are increasingly relying on the cloud to train and run their AI models, and Amazon wants to be the go-to provider.
But Amazon isn't just providing the platform for other companies to do AI. They're also developing their own AI technologies, right?
Right. They have their own AI chips called Trainium.
Which are specifically designed for training and deploying AI models.
And they've made a significant investment in Anthropic, an AI startup.
$8 billion, if I remember correctly.
Yeah, a big bet on Anthropic's potential.
So Amazon is building the cloud infrastructure for AI, developing their own AI technologies, and investing in promising AI startups.
It's a multi-pronged approach.
But they're also using AI extensively within their own operations, aren't they?
Oh, absolutely. AI is deeply integrated into Amazon's e-commerce business.
Give me some examples. How are they using AI?
Well, they're using it to personalize product recommendations for customers.
So when you see those, you might also like suggestions. That's AI at work.
Yep. They're also using AI to manage their massive inventory, optimize shipping routes,
to make sure those packages arrive on time.
and they're even using AI-powered chatbots for customer service.
And let's not forget the robots in their fulfillment centers.
Over 750,000 robots, all coordinated and directed by AI.
Wow, that's a lot of robots.
It is. It just goes to show how seriously Amazon is taking AI.
So the expectation is that Amazon will continue to benefit from the growth of AI, both by providing services to other companies and by making their own operations more efficient.
Exactly. They're well-positioned to be a winner in the AI space.
All right, let's do a quick recap of the key takeaways from the article.
Sounds good.
So it highlights 3 companies that they believe are poised to thrive in the AI era: Meta, Qualcomm, and Amazon.
Each with its own unique strengths and approach to AI.
Meta is banking on the widespread adoption of their open-source AI model, Llama, and they've got the financial resources to back it up.
Qualcomm is hoping that breakthroughs in AI efficiency will drive a new upgrade cycle in the smartphone market, and they're also making a big push into the automotive sector.
And Amazon is leveraging their dominant cloud infrastructure and their deep expertise in AI to become the go-to platform for businesses looking to adopt AI technologies.
It's a fascinating time to be following the AI space.
It really is, and this
Okay.
deep dive has given us a lot to think about.
It has, and hopefully it's given our listeners a better understanding of the potential investment opportunities in the AI space.
And speaking of things to think about, here's a final question to leave you with. If AI is going to play such a huge role in the future of these tech giants, what other industries might be disrupted or transformed by AI in the coming decade?
It's something to ponder. The possibilities are pretty much endless.
Thanks for joining us for this deep dive, everyone. Until next time.